Hey guys, so I'm looking at iShares, and I kind of want to put out this video because I'm seeing some new people get into the market, and they're getting they might be getting a little spooked because of the downturns that we've had in the past day or so. And if you're totally brand new, I get it, I understand it. But what I'm looking at here in iShares is a way, if you're brand new, that you can buy one of these ETFs and really have a very diversified portfolio that you can choose one of these ETFs and it will match your risk profile. Now, a lot of these, they're multi-asset funds. So what they have here, let's go down here. They have these iShares core funds, and they have aggressive allocation right there. They have right below it the conservative allocation, the growth allocation, and the moderate allocation. Now, if you're very conservative, check out the iShares conservative allocation ETF, the AOK. And these pretty much all say the same thing. iShares Core Conservative Allocation ETF seeks to track the investment results of an index composed of a portfolio of underlying equity and fixed income funds intended to represent a conservative target risk allocation strategy. And the only difference between all of them is going to be one's going to say aggressive, one's going to say growth, and one's going to say moderate. Now, all these hold as different percentages of ETFs. So it's a basket of ETFs. You could make this in M1 Finance with the percentages that they have in here. Like, we'll click on AOK. Will this let me click on AOK? Oh, yeah. We'll click on AOK, and we'll see if we can get to the holdings here. You'll see it has an expense ratio of 0.25%, trades for $36.63 a share. And let's see, here we go, holdings. We'll go down to holdings, and we'll see what it has here. It has total U.S. bond market, and I'm sorry, I'm doing this in on screen share, so I'm not able. So if we go over, it has 58% of the total U.S. bond market, and that's the ticker symbol, IUSB. It has IVV, which is the S&P 500, and they have 14.5%, 15% of that basically. You have the IDEV, which is the International Developed Markets, I believe that's what that is, and they have a 11.72% weighting on that. They have a 10% weighting in the International Aggregate Bond ETF, and a 10% weighting. And then they have another ETF, which is the IEMG, which is the Emerging Markets, at 3%. Then they have 1% in the Mid Cap IJH, and then 0.5% in the small cap and IJR. Then they have, this is internal, they have cash and stuff on the side. So you can take these 1, 2, 3, 4, 5, 6, 7 funds and build yourself a pie inside M1 with these percentages of weight, and just set up auto deposit, let it auto invest, and you'll be good to go. Let's check out moderate, which is the medium. So you're not so you're a little bit more comfortable in the market with moderate. And let's see what the holdings are. And it's going to have the same ETFs. They're just going to have different weightings. So if we look at the bond market, it has 50% weighting, and it has a 19% in the S&P 500. So the more you go from conservative to moderate to aggressive, the more it's going to go into more into equities, more into the S&P 500. So let's see what the core growth allocation has for holdings. So in the U.S. bond market, it has 32%, but then it has almost 29% of the S&P 500 and 23% of the international developed. And I think that's the growth. I think the aggressive has the most aggressive S&P 500 weighting. Let's check that one out. Portfolio characteristics, holdings. It has IVV at 38% and the developed markets at 30%. So it has, double what, has almost triple of what the conservative ETF has. Now, one thing you want to look at is if you are not liking the swings of day-to-day stock trading or stock pricing, how that works out, if you want to smooth that out a little bit, one thing that one thing you could look at, one metric you could look at, is what is called equity beta, which is right here, or a lot of places just have it as beta. Now, the S&P 500 trades at a 1.0 beta. So anything above 1.0 is more volatile than the S&P 500. Anything below 1.0 is less volatile. So we have a 0.72. So this is 28% less volatile than the S&P 500. And that's an aggressive fund. That's because it still carries bonds. So if you go to the conservative, the AOK, ticker symbol AOK, I like this fund. If it's very simple. It's not going to blow your socks off, but it's going to give you a monthly dividend yield of about 2.5% roughly, and a little bit of growth with the S&P. So if you're super conservative and you don't like to see your money go up and down like crazy, I like this AOK. And let's see, portfolio characteristics. I'm trying to talk too fast. If I'm trying to talk too fast, that usually ends up what's happening. So equity beta on this one, look at that, 0.26. And that's because it has that heavy 60%, I think it was, in the bond market. Now, you guys know I'm not a fan of bonds, but if that is what will help you stay invested, to ride out the ups and downs, that's fine. You're going to be 75% less volatile than the S&P 500. Now, you're not going to get the returns, but you're also not going to get the downturns either. So I have no problem with someone really sitting down and looking at and having a very good conversation with themselves about how they are with their risk tolerance. If you're a conservative person, it's okay. Just like the ticker symbol of this ETF bond or ETF fund, it's A-OK. So, really sit down, figure out, what your risk tolerance is. It is okay to be conservative. It really is. But you have to understand you're not going to get the upside. But that's okay. If you can't sleep at night because your portfolio is going up and down 2% every day, don't do it. It's not worth it to have, you losing sleep over, in my opinion, over something as silly as money. So that's what I got for you today. Hope this helps you. I'm just sitting here today waiting for my son, and he's about to come out now. So I'll end this video. If you have any comments and questions, please leave them down below, and we'll talk to you later. Thanks. Bye-bye.